Welcome to the Real Estate Investment Nomad podcast. I am your host, Nathaly Salas, an international real estate expert. Join me as we explore the thrilling world of global real estate. We'll uncover diverse international markets, backed by solid data and engaging insights. Each episode features expert guests from the hottest markets, providing you with the knowledge to invest wisely and successfully. Whether you are a local realtor aiming to go global or an investor curious about international opportunities, this is the podcast for you. Get ready to transform your approach and achieve global real estate success to become a real estate investment nomad. Hello, everybody. I am Nathaly Salas with Unicorn Properties. And today in our podcast, we have a very special guest. Our podcast is Real Estate Investment Nomad Podcast. And the reason we are sharing all this knowledge is to encourage people to think outside the box and look at other countries internationally for investment, especially in the real estate space. But today we're going to focus a lot on retirement with our guest here, Craig Morin. I'm going to share a few fun facts before we get started, especially because you're originally from the UK. You left 2009, never came back.
Never come back.
I will ask more questions about that. Live in Dubai for 9 years, which is, I like that, is, you have a very diverse background where you met your wife, Nicole, and we met in person earlier this year as well. And a fun fact that I love to share always is like you being the Everest base camp.
Yes. Yeah, we trekked to Everest Base Camp in 2017.
That's a hike.
It was 12 days. Yeah, it took a while, but it was very enjoyable with a really fun group of people that I actually met through BNI.
Oh, nice. We need to hear more about that for sure, because there's always that personal side to the professional side. I also love the fact that you love to give back. You're the president of the Nevada SPCA. We would love to hear more about that also during, our podcast. And you're living in Las Vegas right now. We've been through every single continent, I feel.
Yeah, I've been through a few, that's for sure.
Yeah, the reason I wanted to chat with you was because you had that broad experience, not only in the US, but also in Europe and in the Middle East. So thank you so much for being with us, Craig. And I have so many questions. I think the first one is more like tell us about you, how do you end up in Dubai and now here in America? And what was the transition?
Yeah, I started out in the insurance industry in Bristol, where I'm from in the UK. And that was in the year 2000. So 24 years ago now, quite a while ago. And when the credit crunch happened in 2008, it just felt like the right time to leave the UK and try something else. So I had friends over in the Middle East, in Dubai, and it was a fairly easy transition for me. Went over to work in the financial space, working with expats, international expats over there, helping them understand their financial footprint and helping them plan for their future. At which point I obviously met my wonderful wife, Nicole, in 2012. And 2017 is when we then moved over to the US, and I started building up my my US practice here. And now with Black Point Capital Partners, who I'm a partner in, which we've now been going for just over 12 months. In fact, our first year anniversary was the 9th of August.
Oh, congratulations. We're almost like last weekend.
Yeah, that's it. As well, yeah, I'm now a fully fledged American. I've got my my citizenship I got last year. So yeah, it's going really, really good. I enjoy working in this market. It's a lot more regulated and a lot more professional. So it's a great space to build up my my professional career and help as many people as possible.
Mm-hmm. Awesome. So how do you stumble into the space? Like some people have maybe like a reason why you wanted to, go into the numbers, game, helping people plan ahead of time. Did it happen? Something happened in your life that you're like, I need to do this?
It's certainly with numbers. I've always been good with numbers. That's probably the only thing I was good at school. But it was my father was an accountant. So growing up, I was always around that. So maybe subconsciously, that's the reason I've kind of gone into this. But no, I do like helping people. I like making sure that people are set and sorted for their future and making sure that I can help people in the best way possible to put their best foot forward. So I think maybe in my nature it is very much of helping. But no, I don't know if there's any one thing that brought me into this space. I enjoy dealing with people. I enjoy selling. I enjoy helping. So I think that's just naturally gets me into this. And I remember being in my first job when I was 16 years old in Bristol. There was a guy that pulled up in a nice flashy red car. And I looked at him. I said, "Oh, that's a nice car. What do you do?" And he was a mortgage broker at that time. I was thinking, right, boom, that's where I need to be. I need to be in a career that I can have a nice flashy red car. And maybe that was something to do with it as well.
Nice. That's awesome. And I like the fact that you have experience, in more than one market. I think that's super important when it comes to financial planning for, to have a global vision. Uh, from your perspective, I think, what it will be the difference between like US, UK, and the Middle East when it comes to financial planning? How are people used to this conversation? Because at least in Latin America, it's not something very, it's like, oh yeah, well, later, when I get old, I'll figure out. But in different cultures, they have different, culture itself. For UK, let's say, in your experience versus US, what is the,
They're,
what is
they're
used to?
fairly similar with regards to, people that are younger, under 40 years old, don't tend to think about it. And then when you're getting late 40s, 50s, that's when you start to really sort of worry about things. I think the Middle East is probably at the forefront. I think everybody over there is thinking about money. That's mostly what drives people over to Dubai and Abu Dhabi and places like that is the wealth that's there and the money that you can earn. So I think everybody's acutely aware of making sure that they save and making sure they put money aside. And the financial services industry is massive over there as well. There's a lot of advisors out there giving people advice with regards to regular savings or pensions and things like that. So I think it's definitely more at the forefront of your mind over there. In the UK, I think a lot of people rely on company pensions and government pensions. Maybe they're not necessarily doing much themselves until it's maybe later. Again, 40s, most people in their 30s and early 40s are having kids and families, and that's where your finances go. And then once your kids grow up, you start worrying about yourself again. And it's similar here to the US, depending on which state or which city you live in. If you're more in a financial city, say New York or even in Miami and places like that, you're going to have maybe a bit more intense about saving money and doing stuff rather than Vegas, where I am. You're not going to have, there's not that much conversation between investments and retirement and things like that until, again, you get to your 50s when it starts to be top of mind and people are thinking, I'm going to retire in 10 years. Christ, what do I need to do? I need to start thinking about things and how much money do I need and start really planning like that. So definite similarities, but a slightly bit different on each state.
Mm-hmm. Well, that's good. They have the, at least in the back of their mind, this is necessary and I have to get it done eventually. But the later that you prepare for it, the faster you need to go and more expensive it gets probably. And
oh my God, yeah.
What's kind of the age average that people, I mean, you say 50s and up when they start thinking about it. Like people in their 20s, they're like, oh, I'm not going to die. Or, I'm not, I have 20, 30 years to go.
Yeah.
What is the age that you feel like your clients are like, hey, I need this, I need help?
It's the majority of my clients are probably in their 50s and upwards. They've worked for a good amount of time. They've built up a good nest egg, and now we're managing it moving forward. I think when you're in your 20s, you just don't think about it. And also because there's no financial education in schools at the minute. And I think that's so important to tell kids of 20 years old, you save $50 a month, $25 a month, something small gets you into a routine of saving, and that will compound and increase over the years to give you a huge pot at the end so that you're not running around frantically at the age of 55 worrying that you've got 10 years left and you've got to save $6,000 a month to hit your target, which not many people can afford to save $6,000 a month anyway. So you then have to reduce your retirement expectations by that point, and then suddenly you're not having those 3 holidays a year that you might have wanted in your 40s. You're having a 1 holiday a year possibly, and you're driving instead of flying because you can't afford to fly and things like that. So it's trying to plan early is definitely the sensible thing to do. But the clients that I'm working with are most of which are very well situated, and it's more of strategically planning about distribution of wealth when they get to retirement and things like that.
Mm-hmm. For your clients that are, let's say, everyday people. What do you think? What is it? I mean, Americans are taking longer to retire because of, how the inflation is going, the economy. If they had any pensions, very few companies now offer them, right? It's
Yeah,
not as common. And I feel like teachers and, the police officers have them, but it's because it's from the government probably. But very few companies now do that. So how do you see the culture on the, retirement? Do you think people now, what are the trends? They're retiring later in their 60s, 70s. Can they retire? Like if, we're talking
yeah.
about 100,000 average
The,
salary.
the average, I think, well, you can retire at 59 and a half. That's when you can start accessing your retirement accounts in the US.
Mm-hmm.
But you're right, more and more and more people are working later in life into their 70s, into their 80s to either increase their income because they didn't save enough during their working careers, or if they're just bored at home, they go out and get an extra job. But I think the average, probably 62 to 65 is the median, if you look at all the stats. And then you've got a few people that will work into their 70s that need to. But the income, I think, for an average retiree nowadays, again, it all depends on what lifestyle you want. But say, $50,000 a year, $50,000 to $100,000 a year as an income in retirement, I think is probably fairly average when you get there.
So and maybe we can throw some numbers to, understand a little bit of, what the goals are, because usually people are not thinking about this until you have a fixed income and you have all these expenses, even from your own home when it comes to property taxes. And that's what we talk all day, every day. We're like, if your bills are 4,000 and your check is 4,000, you're in trouble. But we wouldn't see that until later on. So what is a number like you will think that is an ideal number to save? I mean, this number I think like is being a moving target as we go through, we progress in time, because it gets bigger over time that we need to save a certain amount before we retire. But what do you think, like, let's say a regular family making under or 100,000, because it's kind of like an average 100,000 a year, how much, when should they start saving, and then what is the amount of money they should save if they want to live a modest life? It's not like a luxury, they just want to live within their means after they retire.
Let me grab my calculator. It will be there's no kind of right or wrong answer to how much they should be saving. I mean, 100,000 a year gives you a good amount every month, so it all depends on how much they're spending on a monthly basis. I would say there's no reason why you shouldn't be putting, say, $1,000 away on a monthly basis if you're earning around 8,000 a month. But you've got to look at what your expenses are on a monthly basis and then save. And then after that is what your free money, your enjoyment money, you're out partying, drinking, eating dinners, travel, things like that. I do believe on saving first and then spending afterwards. But the amount that someone's going to want to have in retirement. So when you get to retirement, hopefully most people have paid their property off. Fingers crossed,
Mm-hmm.
If you get a 30-year mortgage at 40 or 30 years old, by the time you're 60, hopefully you've paid the property off. So your mortgage payment hopefully won't be there. And that's usually the biggest expense for a lot of people. So once you've paid that off, all you then really have to worry about is those living expenses, the bills, the property taxes, and things like that. So say that costs, I don't know, $1,500 a month all in, and then you've got some expenses to petrol in the car or whatever that might be. So you've got living expenses of $2,000, and then you need some retirement income over and above that. So an extra $2,000. So say you've got an income of $4,000 in retirement, that's what you've got to plan for. So the way we work it out, how much you need is we'll add the $4,000 a month over the 12 months, works out to $48,000 over 12 months. So what amount of money do we need to generate $48,000 a year? And then ideally you'd have that pot, which is just under $1 million or about $1 million, let's say, for numbers' sake, generating an income of 5% a year, and that pays your income for life. So you then don't have to stress and worry about money each year because you've got a stable amount of income paying you that 48,000 as an income. And if you want $100,000 as an income, you need $2 million to save and things like that. So once you know how much you need to pay the income you want, you can then work out how many months you've got left to work out how much you need to save to get there, if that makes sense.
So it's kind of reverse engineering your plan. First, get the target and cost of lifestyle, and then
Yes.
go back in time and be like, I need this amount to get compound interest over time, right?
Yeah, exactly. And then include the interest on there. And again, we always go for like 4 or 5% as an annual income estimated, because especially right now, you can get 5% in cash with no risk at all with a lot of banks. But just working out what a perfect world looks like, and then working out how much you need to save for that perfect world, and then realizing, okay, well, maybe I can't have the perfect world. I can't afford to save X amount of money by the end of retirement. So maybe that perfect world isn't going to happen, and I can only save half of that. Okay, so my income is going to be reduced. But you've also got Social Security here in the US, which is quite substantial as well. It's certainly different to the UK, where in the UK you get a lower and lesser amount. Now, that being said, there's a lot of talk on whether Social Security is even going to be around when, we get to retirement or our kids get to retirement type of things. So I wouldn't rely on Social Security, but that is a factor in any kind of financial planning, all sources of income. And it doesn't just need to be a pension. You don't just need to save. You could have rental properties. You could buy properties that generate an income for you over time. And then that is another way to bolster your income. If you need $5,000 a month in retirement and you've got 5 properties that pay you $1,000 a month, then you're winning. And then those growing assets and equity on those as well that you can potentially sell and use that money for things. So there's lots and lots of different ways that you can get to that number and work out how much you need for that number, and how it can pay you.
Yeah, I feel it's right that people are losing hope on the Social Security check. I mean, I feel it gets shrink over time. For people that don't know much about Social Security for the US, are those funds managed by the government, and how they invest it and how they give it to you back? Is it guarantee that they give you a set amount based on what you put in, you get out? Or
yeah, there's a calculation. You can go onto the Social Security website. I wouldn't be able to guess on what they do with the money or if they invest it. I mean, I think there's a negative balance somewhere on it, but you can go onto the Social Security website, depending on how much you've paid in. If you've maxed out your contributions over the times that you've worked here, you can get up to $3,000 a month, $3,500 a month, depending again how much you've contributed. The average you see is about $1,500 to $2,000 that people are getting from Social Security as an income. And once it's in place and it's paying, I do believe that it's guaranteed from the government, and then it increases with inflation annually as well. So you do get a little bit of a bump up from them. I think the UK currently you get about £208 a week, which is about $267. And I wrote some notes somewhere, and as I say here, it's about $1,500 to $2,500 a month. So slightly more from the US perspective than the UK, but there's still that can bolster someone's income if you're getting $2,500 from the government, and then $2,500 from your pension and $1,000 from a property. That's $6,000 a month. It starts to look a bit better from a retirement point at that stage. But yeah, I don't know if it's going to be around in 20 years. You never know.
I feel like people are losing hope. They're like, I hope for the best.
Yeah.
And
this is what you plan individually.
Exactly.
And if you get Social Security, then that's extra. That's a bonus, right? So plan to not get anything from it. And if you do, that's extra money that you can spend dinners and holidays and trips and things like that.
Like a nice to have bucket.
Yeah, that's exactly.
Nice. So that's good, because I think, as you mentioned, real estate is a very important component on the diversification of their assets, right? And it's a conversation that is so dry and black and white sometimes. Nobody wants to hear about it until it's too late. And in general, for when it comes to retirement, because they're like, I'll figure out later. But like people, they're investing in properties even in the US, outside of the US. It's kind of becoming a trend now, I feel, more than ever with COVID, that people want to, see what alternatives there are around the world when it comes to where I'm going to live. Because if I'm only going to get maybe $4,000 a month, which is not little for outside of the world, that's quite a bit. But do you see those trends, and are your clients going to other countries to just retire? And and be like, I just want to reduce my, living cost so my money can last longer?
Yeah, lots of clients have got properties in other countries that they use as holiday homes currently, but the plan is to go and live there. Spain, Europe is a lot lower living expense than the US for sure. South America, down in Mexico and Colombia and places like that, there's really good reduced cost living. Thailand, Bali, places like that, all over the world that you can live on $200 a month instead of paying $2,000 a month and things like that here. So plus the cost of properties and things like that over there. I was recently looking at properties in Thailand for one place in Bangkok, and you can get a property over there for sort of $160,000 that you'd be paying in California $800,000. So it's definitely your money goes farther. And if people don't have the grandkids and the family that holds them to the US, then they're definitely looking at where's their money's going to go farther and jumping out. But as an American connected to the US, you've also always got to remember that the taxes are due back here to Uncle Sam, wherever you live in the world anyway. So you're still paying taxes on your income that you're receiving, but you're at least not having to spend $500 at the supermarket every month or every week because the cost of goods is a lot lower overseas.
Mm-hmm. I feel like that has been something why Americans are leaving. I mean, I follow the Nomad Capitalist YouTube channel. It's my favorite. And they talk about a lot on why some Americans are renouncing their citizenship, because you get taxed at the beginning on your income and then you get taxed at the end on your retirement income. Well, like, didn't I just pay? But maybe, what would be like a IRA and all these other tools that people, that you suggest them to use so they can defer taxes for the end. But then if their income is higher here, will that affect them when they pay the taxes? Is that
ultimately anything anything paid into your pension it will go in free from taxes. So you're not paying taxes on your income and then putting the money into another account that then gets taxed again. So you're not paying taxes twice. So in your 401k or your IRA, which is the individual retirement account over here, everything that you pay into that is free from taxes. So whilst it's in those vehicles, it's growing free from taxes. So that's where the benefit comes, is that all of that money that you're making each year in growth isn't taxed. It's only taxed when you take the money out. And then depending how much you take out, so if you've got a high earner in retirement that is in the, I don't know, 30% tax bracket or something, 32% tax bracket, then everything they take out of their pension, because they're earning over the amounts, is going to be taxed at 32%. But all the growth that they've had over the 20 years or 30 years or 40 years it's been in that retirement account has all been growing tax free. So you are only getting taxed once on it. If you're putting money into anything after taxes, you can put, depending on, again, how much you're earning, you can put money into a Roth vehicle, a Roth IRA, or if your company has a 401k Roth, you can ask them to pay your taxes today if you know you're going to be a high earner in retirement and have a larger tax liability then. So then you can pay the taxes today at today's tax rate. Because realistically, in 20 years' time, the tax rate is going to be higher. I think I read something recently that they're looking at increasing the tax rates in the US in 2026. So if you're a 24% tax earner today, in a few years' time, you might be automatically in a 27% tax bracket. I don't know. But so the taxes are always going to increase. So if you're able to take advantage and make that money tax exempt earlier than later, then there's lots of different strategies to help people do that as well.
Mm-hmm. Yeah, I think that's a good clarification for some people that maybe don't want to save right now. They're like, oh no, I'm gonna get taxed more later. But then also their income can vary, right? Like either you hit it and you become a millionaire, you're like, oh, okay, now I have to pay taxes more. But usually the regular person reduces their income over time when they approach retirement, or they try to hit it as high as they can as they get towards retirement.
Saving. And then when you retire, you're not spending as much. At 86 years old, you don't necessarily need $400,000 as an income. You'll be happy just getting 50,000 and just doing your thing. So that's the intention. But then there's other elements to it depending on how much money's in the pot. When you hit certain ages, the government push you and make you take money out of required minimum distributions at the age of 73 and a half. Now that has increased over the last few years because during COVID. they bumped it up. So who knows if that might be put up higher as well later, 75 or something like that, because as we mentioned earlier, people are working longer. So why force someone to take money out of their retirement account if they're not retired? So we don't know what's going to happen from one year to the next, but it's just always best to speak to someone and understand what your options are.
Yeah, I'm sure that every scenario will be different for different families or different individuals. And that's when they need a professional, because, I mean, you're going to give them a general answer. It will be more like, it depends on, your plan, your budget, how much you can save, and very targeted that way. For the real estate space, and we love touching this topic because, we're in the international real estate, and we're always curious to hear if you have clients that decide to go on the route of, let's say, taking their 401k, at certain age and then buying property abroad. Would that be probably a good vehicle if they get hit with that extra tax fees and fines? For that, is that common? Like, do you see it happen often or not so much?
Not that much, no, because you do get penalized for taking that money all out, because again, it's got to be taxed somewhere. So depending how much money you're going to take out of it, you could lose 20-30% from a tax perspective. There is options. If you've never owned a property, you can access some money out of your 401k penalty free to purchase a home. And it's a case by case basis, as you say, for each individual of what that looks like. But it's not something you don't tend to see people taking their 401k and throwing it all into a property. I haven't anyway. I mean, other people may have, but it's not something I come across that often. You can utilize it as an income to pay the mortgage off on a property, or you can, again, depending if you've never owned a home or if you've not owned a home in a certain amount of years, you might be able to take a percentage of the 401k out towards that home purchase. But no, it's not necessarily a good recommendation either, because most of those lump sum 401ks, IRAs are to generate an income for you for life. So even from a fiduciary standpoint, we'd have to look at it and see if it's the right advice. Because if you take all the money, buy a house, and then you've got no money to live in the house, you're stuck in a position,
You have to make the house make money for you.
Yeah, there you go. Get the income.
Yeah, true. Okay, yeah, that's good information, because, well, those fees are quite high and people don't look at that until it's, later on in life. I know, like, for Canadians, there's a way to do that for Mexico purposes, and we were trying to find a partner that kind of helps Canadian citizens to transition to Mexico. Do you work with anybody else in the North American space? Are your clients global, that you can help anybody within their own jurisdiction, let's say, their own country? It varies.
Yeah, majority of my clients are US based for sure these days. Obviously, the international clients that I had, I left with the previous company. But the majority of my clients these days are people living in the US, and a lot of Brits. I work with a lot of Brits living in the US, just because being British and understanding the UK side of things, I can help them understand it as well. But also Americans overseas. So Americans overseas are still connected to the US because of that blue passport and because of the requirements that they have. So, if you've worked in the US for 20 years for ExxonMobil, for example, and now you're living in Saudi Arabia working there, you still have an ExxonMobil pension sitting in the US that's not going to be being managed if you're on an overseas contract. So those types of clients I work very well with, and helping them manage their US assets that are still here. I'm registered with the SEC, so you need to have somebody that understands that, whereas overseas financial advisors won't necessarily want to work with Americans because they don't want to get tangled up in the SEC requirements and the reporting requirements and things like that. So you do find that a lot of Americans don't get the best advice from overseas, so that's why we happily will work with those. But the majority, as I say, are based here in the US and across the whole states. It's not just one. I don't just work with people here in Nevada. I've got Florida, Massachusetts, California, all over the place, Texas, and just helping them understand everything.
I like that you said the blue passports. It's like the passport.
Yeah, that's it.
Is the UK the same way as the US, that when you come to other countries, you are bounded to the UK tax laws, that you always have to pay taxes until the day you die because you're from the UK? Or like Canadians, sometimes after 6 months, you're not a resident anymore and you're paying taxes where you live.
With the UK, if you have any UK derived income, again, I'm not a tax expert, so throwing that out there, it's not advice. But from a
Full
UK
disclosure.
standpoint, yeah. From a UK standpoint, you have to pay taxes on any UK derived income. I don't have to report anything to the UK, and I haven't since leaving there because I didn't ever generate any income from the UK perspective. It was always overseas money, and they don't tax currently on overseas income. Now, I did read something recently that they are considering looking to tax like the Americans do, but right now, I believe as of today that they're not. So anyone living outside of the UK, as long as you're not generating an income, and even if you've got a rental property in the UK, which I did have, and that was generating less than the threshold in the UK, but I still had to report it, and any taxes on that would have been paid, but it was underneath the threshold, so it was fine. But if there's anyone living outside of the UK and earning, £30,000 over there, then you need to pay taxes on the UK element of that, I believe. But again, not advice.
That's good because it gets tangled up within, financial planning and then the tax perspective. So do you work as a team with any tax planning office partners that can help clients, like tangle them both up together? Because sometimes you need this one to proceed on that one, and then you need this tax information to make sure to make decisions in the financial long-term aspect of things. Like how together, I mean, I'm sure it's almost meshed together, but in a way that, how do you guys operate that?
It's complicated. So we don't partner with anybody. So we don't necessarily have one person that we say, go and use this person. But there are 2 or 3 companies that I refer to around the US that are quite good with the UK-US understanding. So that certainly when you start receiving your UK pension from the UK government might want to tax that. But when you're living here in the US and receiving US income, what do you do with both? So we certainly do partner with a couple, and usually, when you sort of give out his 3 recommendations, you decide, Mr. Client, which one you want to work with. But they're all experts in their space. So yeah, there's definitely a few people that we can connect you guys to that are listening out there, that if they need anybody in that international space, and it's worth doing because even if you've got no malicious intent about not paying taxes, the US government are still going to want their slice of the pie. So you're better off getting that expertise, getting that expert advice, so from the start that you're doing the right thing rather than doing the wrong thing, and then the IRS coming in and digging through your last 5 years of accounts and giving you $100,000 bill that you don't really need to worry about because you should have done something in the first place. So yeah, we definitely work with those types of individuals and always recommend our clients to speak to them first.
True. Yes, because I think for Americans, you have to declare your bank accounts abroad as you own them, whether you make money there or not, but they want to know, to have it just in case in the record. And yeah, I think that's kind of been the debate, like how is too much or too little of trying to reach into people's pockets without saying much. But personal opinion.
The CPAs and the tax professionals will help people structure in such a way that it's done correctly and above board. And if you start off on the right foot by doing that, if you're buying property internationally as an investment property or whatever it might be, just make sure you set your company structures up in certain ways that are going to be the most beneficial to you. So I would definitely recommend that be part of your buying process when looking at international real estate for sure.
Mm-hmm. And when you mention also about, Americans living abroad and having their assets here, and probably they are either not keeping an eye on it or they just forgot about it. And then, like it happened to me too. Like I changed companies and there goes my 401k and the next one. I'm like, where is my 401k? And I had to go back so many times. And my last tax person was like, we need these specific, HSA contributions. And I'm like, what is that paper?
I have no idea.
Like having that track record, I think is super important because does it happen to your clients come to you like, I had a 401k somewhere, I just don't know where it is. And how do they go back in time to go and find that?
So there's always going to be a paper trail for any financial vehicle that you've got. So all the 401ks, all that happens is the company that you previously worked for will have a management company, whether it's Fidelity or eMoney or someone like that, one of those big companies. And it will just be sat plodding along. It won't be tailored to your specific requirements or needs, but it will just be sitting there doing nothing, dormant, we call it. And I spoke to someone recently who has eight 401ks from 8 previous jobs just sitting doing nothing.
Okay.
It's like, well, what you can do is if you're going to a new employer, most of them will have a 401k that you can roll the old one into if you wanted to. So you don't have to leave it with the previous employer. And if you want to control it yourself, you can roll it into your own IRA and manage it that way. But yeah, eight 401ks sitting dormant across different various companies across the US. And you're right, so many people forget that they've got one or don't, because it comes out, a lot of companies may contribute to it for you. So it's not coming out of your pocket. You don't think about it. So when you leave, and you might have been at a company for 3 years and you think, oh, no, it's not worth it. Well, that builds up over if you come back in 20 years' time, that 3 years is now worth $50,000 or something. Now that's a good chunk of money that you can put to work. So yeah, if you've worked for companies and forgotten about things, contact your HR department of the previous company. They should be able to put you in contact with the money manager that's managing the portfolio for the company. And then you'll be able to find a paper trail, a valuation, a statement, something like that. And then go and find a financial advisor to help you connect that with all the rest of the dots.
That was like advice for myself. I was like, okay, let me make some notes. I have 3 401ks. I was like, but I was like, I get it. I mean, it wasn't that much, but now that you say that it compounds over time, I'm like, maybe I should take a look at that.
Yeah, definitely. Get them all put into one place, and then if you've got 20 grand here, 5 grand here, 3 grand here, and you put it all together, and then you've got the bulk of the money, and then you get the investment portfolio put into such a place that are aligned with your requirements and what you believe in. So, the younger you are, the more aggressive you can be in a portfolio. If you're in your 50s and 60s, you probably don't want to be investing into emerging markets, for example, because of the volatility. But, if you've got 20 grand and you can invest it for 20 years, compounding, that could give you over 100,000 in that time scale. So definitely look at it, Nathaly, you naughty girl.
That's my homework, and I'm just taking my notes because I was like, I need to talk to Craig because I have a personal question.
Yeah, there you go.
Yeah, I need to get all this together because when I left corporate, I was like, oh, it's nothing, like I put some money in it, and then I kept changing companies until I retired from corporate, and I'm like on my own. I'm like, wait a minute, and I need to look at that because I need to do my own due diligence right now, because when we're independent, right? Like I feel like the 401k route is very comfortable because then before you see the money it's gone into the savings space. But when you're independent and maybe you encounter this with a lot of business owners, they don't think about that too much because they're putting the money back into the business. But it's also a write-off, I think, for taxes, right? Like they have to think they both, benefit, but also they might see it as a burden at the beginning, but it is something that they can write off on their business.
Yeah, there's contribution limits and things like that. As a business owner, you can tax-free money that goes in. So if you pay whatever amounts you're paying into your 401k or your company SEP IRA or whatever you set up, everything you're paying in then can be written off, I believe, to a certain extent from the taxes side of things. But also as business owners, when we set up our business or we're putting all of our time, money, blood, sweat, and tears into it, you're not thinking about your future. You're thinking, okay, well, I'll get the business to such a state and then I can retire off the business. We still need to be conscious of doing something, and just saving small little bits on a regular basis really do add up, and can be that backup plan. Because I mean, starting a business and being self-employed is difficult. It's constantly difficult. So it may not always work. I think 50% of businesses, new startups, fail in the first year. I think it is something like that. So having a little bit of savings along the way may not be a priority, but it certainly should be something you're doing. And the same with setting up the correct insurance as a business owner, making sure that if you're no longer around, the business can keep going without you. I was listening to a podcast a friend of mine in the Middle East was doing the other day, talking about corporate insurance covers and policies in place to cover the business partners and making sure that everything is aligned. And from the beginning. And I know there's money going out for other things, but there's got to be a priority set aside for that future planning for your business and yourself, as part of the budgeting when you're setting up a new business, I think.
Yeah, I think it's like back to the putting the mask on yourself first before everything else, because if you don't plan for yourself, nobody will. I mean, you're gonna probably not be prepared when it comes to this time that you're like, okay, I'm ready about, I want to enjoy life, and I'm like, okay, where's my money? It's not producing much as I thought it would be. Hopefully, that's not the case, but I feel like I've seen many business owners not thinking about that until later on, and they didn't get any insurance for themselves, or I don't know if it's called a key man insurance or something when you're a business owner, that they don't know the importance of that. If you're gone, like you said, we don't, with COVID, a lot of people start thinking about personal insurance, I mean, life insurance, other types of insurances. So that's part of the portfolio that you create for them, right? Like that safety for their family in case they're gone.
Yeah, what we do is tend to go through kind of a fact find to understand what the client needs and what the client wants and what's important. And then we come up with a priority list of, what they feel that's important. Because again, it's not my place to tell you what to do. I'll advise you and say, hey, there's A, B, and C. But ultimately, it's the client's decision of what they want to do with it. But certainly planning for life insurance with business owners, young families, things like that is something that's a priority that nobody ever thinks about or wants to do, because it's money that you're not getting to use. It's like car insurance. You pay your car insurance every month. You're hoping you don't have an accident. And if you don't, great. But you but you begrudge having to spend that couple of $100 a month on the insurance policy. And the same with the life insurance. You never get to benefit from a life insurance policy unless, you can do if you get critical illness, but ultimately you're setting a life insurance policy up for your family and your loved ones, and your business partners and things like that to make sure that they're protected, not you. But again, it's a priority, and there's lots of expenses when you're setting up a new business, so it's not always a priority for some people. Yeah, sadly not. But it's something we try and have a conversation with people and help them understand all of the options, how much it all costs. But I also think that once you start writing it down and having a plan and understanding what that plan looks like, it becomes really simple. I think with any target, as a business target or any goals that you've got, as soon as you break them down to what I should be doing every day, as simply as that, I need to pick up the phone 3 times a day to get X amount of clients, then it helps. The same way as we plan for retirement. I want to have $2,000 a month as an income. Okay, well, you need to have 12 months times that by that. This is the number we need to plan for. And how do we get that? We reduce it down basically. So you need to be saving $3 a day or whatever the numbers are. But once you break it down to really simple, small bites, it's really simple to plan. And I think doing the same as that with your life insurance, doing the same as that with any kind of planning that you're doing, it just makes it a little bit more simple. And I think people worry about it more than they should, because they're looking at the big numbers rather than reducing it down and looking at the small numbers. So once you reduce it down, it's not as overwhelming, I think, is probably the word I'm looking for.
Yeah, I think anything that comes with numbers, and if people are not into numbers, they'll be like, I don't want to think about this right now, but then sometimes it's just too late when they actually do.
That's right. Yeah. And then it's a big number, and then you're worried about it, and you think, oh my goodness, how do I do it?
Because it's like the big elephant, right? Like you need to eat it in pieces, not the whole thing.
Yeah.
Not I'm gonna eat an elephant, but I'm just saying.
Right.
I haven't tried that kind of meat, but for like, let's say educational purposes, do you advise or suggest any channels or any content that you put out that people can go and follow for financial literacy so they can learn more, be prepared? And I know no advice is like advice for everybody, but just something that they can read, follow articles.
I mean, so there's loads of pages on LinkedIn, YouTube, that give you kind of understanding of basic financial instruments or financial plans and things like that. I follow the likes of Financial Times that give you good information of what's happening in the markets these days. Bloomberg, CNBC, Fox Business, all of those channels will give you a good understanding of what's happening day to day in the world. Our website, blackpointcapitalpartners.com, we're posting blogs and useful information. My own personal LinkedIn page, if you follow me on LinkedIn, I'm always sharing some useful tips and hints about everything, not just finances, about medical insurance, car insurance, cybersecurity, things like that. Just things that are important for people to be aware of. It's not things that I work with, but it's just topics that are useful for people. So those basic sites, but I mean, even these days, there's some really good people on TikTok. I can't remember the names of them, but some really good content producers on TikTok and Instagram that really catch my eye of just useful basic tips. Again, if you're younger, saving $5, $10, $20, there's apps out there, Stash, Acorns, Robinhood, and things like that that you can save a minute amount on a regular basis that builds up over time, and you can be 22 years old and have $3,000, $5,000 saved over a 12-month period. And then that compounding over the next God knows how many years, it really can help. So there's a lot of content out there these days that can really help people.
Mm-hmm. Yeah, it's never too late, and you're never too young, too old. So to get started early, and I mean, just get informed and just check what's happening. Even in TikTok, I like the content there because it's quick, straight to the point, and then you can go and find more information, Google it, verify the sources, and all that. But it's a good start.
It's great, and that's it. Just look, do a bit of research. And most financial advisors like myself will happily speak to anyone with no obligation. There's no cost involved to speak to someone like myself. We charge and get paid from the money that we manage, and I will speak to absolutely anybody to help them and give them advice for 5 or 10 minutes. There's no harm in that. And point them in the right direction. It's something I enjoy. I like telling people they don't need things like life insurance. It's like, you're covered, you're fine, you don't need it, you don't need that, or you've got enough money, you don't need to worry. Those are my best conversations. So happy to help absolutely anybody understand where they are now, where they need to be, and point them in the right direction. That's something I enjoy.
Awesome. I feel I need to make an appointment with you after this call.
You do.
Well, I'm going to check my 401ks from wherever they're sitting right now. Hopefully somewhere safe. And the worst part that happened to me once was when they sent me the check to cash it out. And I'm like, wait, I didn't ask for this. And I'm like, what do I do with it?
If you spend it, then they'll tax you and things like that. If you don't put it into something quick enough,
And that's a good point, because you're like, when it's too late, it gets on the mail and you're like already taxed. They took the fees and the fines, and you're like, oh, I think I had $5,000. I'll have 1,000. I guess.
Yeah, that's it. Where's it all gone? Yeah.
Reducing my money to the minimum expression.
That's it.
I think I have 2 more questions, but one of them is about economic policies within the government. What do you see trending that the new government, I mean, like where we are right now? I know it's a touchy topic, and we don't know the future, but do you foresee any, like, people need to be aware of this type of policies that might be implemented that in the US may affect the regular saver, or I mean, I have another question about also crypto. For that, now,
I mean, policy wise, I don't know what's going to happen. What I would say is we're now in when this is being filmed, obviously, is August. So by the time this comes out, we may have seen a rate cut, an interest rate cut. I do see that coming over the next month or so. The UK have just dropped their rates by 25 bips. So I think the US will follow suit and drop in September. That can help people restructure some loans, depending on interest rates and things like that, if you're able to do that to save some money. But from a policy point, I really, all I can say from this point is just be prepared for volatility. Make sure you've got a diversified portfolio, because usually around election time or around election years, you get a lot of volatility that we've seen this year already, but into next year as well is going to be the same. So if we do have a new government, or if we keep the same government, it's going to be rocky, it's going to be volatile, there's going to be swings. So just make sure that you've got a diversified portfolio, not overweight in any one area, because if you've got 50% of your money in the S&P 500 and it drops 10%, your portfolio is going to be hit. But if you've got 15% in the S&P 500 and 15% of your portfolio drops 10%, you've still got 85% of your portfolio in other places, so that can help bolster it. So just make sure it's diversified, and don't necessarily worry too much about the headlines, because the headlines are not what changes the markets. The markets will do what the markets are going to do, and you've got big institutional investors that already account for a lot of the noise that's going on right now, and so that the market should hopefully be able to withstand it. But yeah, just be prepared and invest for your time scale, right? So if you're investing today and you want your money at the end of the year, then that's a different strategy to investing today for 20 years. Because if you're investing for 20 years, what happens today and tomorrow really shouldn't matter to you, because you're investing for the long term. And don't be looking at your investments every single day if you're investing for 20 years, because a downswing of 10% or whatever we had 2 weeks ago is bounced back up and recovered. And the amount of people that pulled out of the market because they were fearful and then didn't get back in when the market rebounded, it's just you're selling at a loss and losing at a loss. You're buying back in at more expensive, and you're just putting money into the pockets of the wealthy when you're pulling out the markets when they drop. So just be sensible with your investments, and yeah, invest for your time scale. And remember that when you retire, even if you retire at 65, that doesn't mean your money shouldn't still be invested at 65, because you still need to get returns on your money whilst you're in retirement as well. So just be sensible with it, be strategic, and be thoughtful, and diversification, throw a couple of properties in that portfolio as well as having it invested in the stock market. Let's try and get it from a few different assets to building up a portfolio of assets that generate different amounts of income for you, and then you're not reliant on one sole thing. If the economy goes down the toilet in the US and you're only invested in the US economy, what can you do? But if you've got a global portfolio of properties and equities and this, that, and the other, if the US is a portion of that and the US goes down, you're not worried, because the US will come back up later on, and you've got other assets that will help bolster it. So yeah, diversification is key.
Yeah, that's a good suggestion. I've seen other people following. I mean, they plan for 20 years and they're still looking at every day. They will lose their minds. Like, what?
You'll lose your hair if you do that.
Yeah. Apparently, you've been in the business for too long.
That's exactly right. Yeah.
I'm like, oh, what did I do? No,
Stress.
I have a personal question. If you had to retire yourself, what country would you pick, or would you stay in the US? Like when you're like, I'm ready to go.
I would probably pick Africa.
Nice.
I love Africa. I spent a good amount of time in Malawi and Kenya when I lived in the Middle East. We used to do a lot of charity work in Malawi, building schools and working with a charity over there, which was fantastic. But Africa, it's low cost of living, really low cost of living, but the people are friendly. Obviously, country by country, there's lots of different countries over there you could pick, but I think that would be there, or somewhere like Bali or Thailand. Somewhere that would be that would probably be, or just buy a boat and travel the world. I mean, crikey, there's so many options, but certainly I think those countries would be, if you gunned ahead right now, if I had to retire tomorrow, it would be one of those 3 countries.
That's awesome. I will follow you there, because you're the numbers guy, so you know what you're doing.
There you go. You'll be more than welcome.
You're like, okay, let me follow Craig on the direction, because that's sometimes how people invest, right? They follow good investors and then just kind of copy their moves, and
yeah, that's it.
This. So absolutely. Yeah, for international real estate has been like that trend. When the dollar goes up, sometimes the other currencies go down, and I think that's a good way that people can leverage the exchange rate that some people don't think about. If you're only in the US, you only know US dollars, but when you compare it to different markets, it can be that you can get more real estate for your dollars.
Yeah, definitely, it's worth doing that. The playing the currency markets is quite a complicated, difficult game to play, but certainly if you're able to benefit by getting into a market when it's a lot lower. I mean, obviously the Japan currency just was bouncing around all over the place a couple of weeks ago, and so I'm sure a lot of people were able to get in and buy something for a lot more cost effective than what they could have done 2 weeks before. So if you're able to do that, good for you.
I monitor the peso to the dollar, Mexican peso to the dollar, because that's our primary market. So when the dollar went to almost 19, when it was 16 for a long time, they were like, I don't know what it means. But that meant like that your property is $20,000 less when you're thinking about the price, like, for $200,000, and you can buy for 180 now. So they're like, oh, wait, what? That actually matters. So I follow it every day.
Definitely big.
We had to get a flag to everybody, hey, dollar went up. That means that these are the savings for you if you're investing from US to Mexico. But that's kind of our own fun hobby to do and keep track of.
That's it. Yeah. When you're doing it with your own money, it's fine.
Yeah. Yes. So full disclaimer, do it with your own money. Don't.
Yeah, that's it.
This is not expert advice, but it is education to make sure that people understand more. And the last question I have, is for cryptocurrency, and that topic is so hot. And do you currently, do you believe on it? Do you let your clients, let them know that it's a risky investment? Do you see people leaving the US because of that crypto mindset that they want to go at it? And in the US, we have a lot of restrictions. What's your opinion or your take on that?
So crypto, I don't get involved with. I do see it as a very, very risky investment, and any clients that want to get invested in it, I tend to say, right, that's something you need to do by yourself. I know there's a couple of crypto ETFs coming online or online so far that have been approved, but again, it's an incredibly, incredibly risky investment, and you get 10% swings on a daily basis on it. So it's something I tend to step back from and just let happen. I do believe there is a space for crypto because in the international space, paying money overseas and paying for things is definitely a lot more secure, I think, from this crypto point of view. And I've got friends that invest heavily in it. They've dedicated their lives to it now. The number plate says crypto and things like that. But it's
Those contacts, by the way.
yeah, yeah.
Curious.
That's it. But for me, it's just something I don't understand it well enough to invest in it, and the fundamentals of what actually underlines it is something that concerns me. So there's a lot of coins out there that are not necessarily legit or big. You've got obviously Bitcoin, but then there's all these other little ones that I think people jump onto and ride that wave, and then people just dump all their funds and leave a lot of people with nothing. So I tell everybody, do your own research, look at what you can invest in. It's entirely up to you what you do with your money, but it's not something we as a company or me as an individual look to help with. And I wish them well. I mean, it's as risky as going down to the casino and on the strip and putting all your money on number 36 or something like that and just hoping for the best. So it's a huge gamble. And if you can afford to take the loss of the money that you're investing in crypto, give it your all. You may win, you may not, but if you can afford to lose it, then that's entirely your decision.
Mm-hmm. I get to see the world with crypto where you can buy actually properties with crypto, which is happening in some countries, like Salvador. Yeah. Mexico is taking some, and some other countries are open to it, but still there's a lot of regulation that needs to be, had. And I mean, that's the opposite of, the blockchain, the regulation, but at the same time, the day that we can have the transaction without that many players on the game, that would be, for buyers easier to buy with smart contracts. I mean, that's the way we're kind of getting educated more on the real estate space, but I absolutely don't have any advice on that. But it's good to see your point, on what's next with that,
But yeah, for me, it's like if the property's worth $200,000, and which is X amount of Bitcoin today, and then Bitcoin jumps tomorrow, so that property is now worth the same amount of Bitcoin. So the property is now worth $400,000. But if you paid US dollars, it would be two. That would be because it's not pegged to anything.
Yep.
That's why it just fluctuates freely. So that's always just is right now we look at it as a US dollar cost rather than just one Bitcoin.
Yes.
And because it's not pegged, it that's what confuses me. There's just so much unknown out there with it. I'd rather just use physical gold coins or something like that. At least I know how much they're worth.
The weight.
That's it.
That's true. Awesome. No, this is great information, and thanks for all the tips and the pointing out people in the right direction when it comes to investing, or at least doing it early in there. You're never too old, and it's never too little. So I think I have to remember that as well, and hopefully the viewers get more out of this chat. And how can people find you online, or what's the best way to reach out to you in case they have questions or want to make an appointment with you?
LinkedIn. If you go to my LinkedIn profile, my name is Craig Morin on LinkedIn. You can actually book an appointment straight from my LinkedIn page. It will give you a 15-minute consultation with me. And then if we need longer, we can book in a second time. You can send me a message through LinkedIn. It comes straight through to my phone. Great way to contact me is on there. I'm very active on LinkedIn as well. So if you just follow me, you don't want to talk to me, you want to sit in the bushes and watch from afar, feel free to connect and follow me on there. And at some point when you're ready, or if you want to in the future, you can connect with me. But LinkedIn's the best place to get in touch.
Awesome. Okay. We'll put all the links and in the description so you can reach out to Craig directly. But thank you so much again for your time and all the little tips that are that we don't think about right now today, but are very important for the future.
Love it. Thank you so much for having me, Nathaly.
Thank you for joining us on the Real Estate Investment Nomad podcast. I hope today's episode has inspired you to explore new horizons in global real estate. Remember, the world is full of opportunities waiting to be discovered. And with the right insights, you can turn those opportunities into successful investments. If you enjoy the show, please subscribe, rate, and leave a review. Your feedback helps us bring you the best content possible. Don't forget to follow us in social media for more resources and updates. Until next time, my friends, this is Nathaly Salas, encouraging you to think big, invest globally, and transform your real estate journey. Safe travels and happy investing.